Hello there, welcome to Watson's Daily TV. I'm Peter Watson and I'm here with my take on two major topics in this morning's business news distilled for you in 3 minutes. This is a cut down version of my weekday newsletter, Watson's Daily, in which I usually comment on a number of companies and themes. Can I beat the buzzer? Today, I'm going to talk about Asos and UK retail. Following on from what I said yesterday, Asos' profit warning saw the shares fall by around 40% as investors expressed their shock. September and October trading had been doing well, but they had a disastrous November, which resulted in the company deciding to trim its full year forecasts. This was made all the more surprising by the fact that the company had been talking up its prospects until fairly recently. Everyone is now panicking about whether this is an Asos specific thing or a sign that online retailers are now feeling the pinch as much as offline ones. Clearly, if the former is the case, then the sector may have been oversold following the news, but if it's the latter, then the news flow in the sector could get even worse. Those who argue that this is Asos specific, say that their sales targets were too punchy given the retail environment and that they may have got their pricing wrong for the Black Friday period, and they point to the fact that its smaller competitor Boohoo seems to be fine. Those who argue that this is an early sign of a broader problem point to weakness in the share price of its European rival Zalando. I think that yesterday's extreme moves will provide BDI investors with some money-making opportunities as the whole sector was sold off. Second thing I wanted to talk about today was the UK retail sector in general. Basically, Asos' bad news is just the latest in a sector that's taken a real battering in the last year or so. Toys R Us, Pound World and Maplin went under this year, and the likes of Mothercare, Homebase, Carpetright, New Look and others have had to enter into CVAs to continue trading, and customers are now being offered discounts of 43% on average to tempt them to spend. On the positive side, the latest figures from Barclaycard show that people are still willing to spend on experiences, with ticket sales up by 30.5%, pub spending up by 11.3% and restaurants up by 8.3%. When you consider that on the consumer side, we've currently got the lowest unemployment rate since the 70s, a record number of job vacancies, pay rising faster than inflation and ultra low interest rates making borrowing cheaper, it seems that the main thing holding people back is confidence in personal finances. We basically need clarity on Brexit. You can get more detail on these stories and more in my daily weekday blog on watsonsdaily.com. For instance, in today's edition, I talk about the increasing possibility of a second referendum, market reaction to US-China trade friction, UK property and Hitachi's big investment. Anyway, Watson's Daily is intended to give you the essence of the day's commercial news with opinion. You can read the whole thing in anything between 1 and 7 minutes. Oh, there you go. Please go to watsonsdaily.com to find out more if you're interested. See you tomorrow, and thanks for watching. Watson, out.